The crypto market is on edge as an extraordinary whale alert flashes across on-chain scanners. A massive sudden $100 million in XRP has just been transferred into a major exchange wallet, triggering immediate speculation about what comes next. Traders rush to interpret the move, with fear spreading quickly that this could be the start of a devastating sell-off, a liquidation event big enough to yank XRP's price downward in seconds. Social feeds explode with warnings that a major holder may be about to exit the market entirely, raising the possibility that the broader structure of XRP liquidity could be shaken in real time. The scale of the transaction alone is enough to spark headlines, but the location, an exchange deposit wallet, adds another layer of tension. Historically, when whales move large quantities to centralized exchanges, panic sellers react instantly, cascading into volatility. The question now is whether this whale is preparing to dump, or whether the movement is a strategic ruse designed to mislead short-term traders, shake out weak hands, and accumulate more XRP at a discount. As the speculative frenzy intensifies, analysts begin dissecting the transfer with precision. The receiving exchange's hot wallet has been intermittently involved in institutional-grade flows, including past transfers from private custody solutions, OTC desks, and algorithmic liquidity providers. So these patterns add complexity because not all exchange deposits are sell-offs. Some are actually collateral movements for leveraged positions, internal wallet reorganizations, or just temporary placements before being moved back to cold storage. The oversized magnitude of today's transfer, though, makes a simple wallet shuffle less likely, but well, it doesn't confirm an imminent liquidation either. To really understand this signal, analysts zoom out and examine multi-week whale wallet behavior. Over the last several months, large holders with over 100 million XRP have increased net accumulation, even during periods of weak price action. Every time retail sentiment dipped, these wallets expanded their positions during the consolidation phases around the 45 to 60 cent ranges. Technical indicators add even more intrigue. XRP recently formed a tightening symmetrical structure on the macro chart with decreasing volatility and declining volume, a setup that often, precedes explosive movement. Support around 55 cents has held firm despite several stress tests, and whale accumulation during low volatility phases historically precedes trend expansions to the upside. Analysts mapping the relative strength index observe that the RSI has hovered near a neutral band, neither overbought nor oversold, giving whales the exact environment they favor for long-range positioning. On the weekly chart, XRP remains above its long-term trendline support, a signal that the macro structure is intact even if short-term sentiment appears shaky. These conditions do not match environments where whales seek to exit. Instead, they align with strategic loading zones where major players quietly prepare for momentum cycles. Further strengthening the bullish interpretation is the comparison to previous whale movements. The last three instances where over $50 million in XRP entered exchanges resulted in short-lived dips, followed by substantial upward rallies when accumulation resumed. Historical patterns show that whales often transfer to exchanges during transitional market phases in order to test liquidity depth. When retail panic sells, whales reabsorb the assets off exchange via private OTC channels, repeating the cycle until they have acquired enough volume to drive a controlled rally. If the current $100 million flow mirrors this strategy, then what appears to be a threat may actually signal the prelude to acceleration. Market structure analysts also highlight that XRP's order books across major exchanges are unusually thin on the seller side, between the 70 cents and $1.20 ranges. Thin books amplify price movement, and a catalyst such as a whale accumulation confirmation could propel price far more quickly than during normal market conditions. So combined with XRP's recurring role in speculative cycles that are tied to these big macro liquidity events, traders are, really preparing for heightened volatility. Several indicators suggest that instead of distributing, major wallets are actually positioning for a breakout for the multi-dollar range, especially if those volume spikes show up again on the daily chart. Investor psychology plays a pretty critical role here. When markets misinterpret whale behavior, large players can well exploit the emotional reactions of smaller traders. Fear of a dump creates some temporary downward pressure, which gives whales a discount on re-entry. This dynamic, it really feeds the speculation that the current event isn't a liquidation, but actually a setup. The broader sentiment is shifting rapidly as analysts overlay Fibonacci retracement zones and spot a confluence of targets between $1.80 and $2.40. If the breakout extends beyond the long-standing $3.30 resistance, last tested back in 2017, analysts believe the next psychological threshold will form around $3.50, a level that aligns with both historical expansion patterns and present-day structural metrics. This target becomes even more plausible if whale accumulation continues during the consolidation phase, and honestly, if liquidity inflows increase across Asian and European trading sessions. In this context, the $100 million whale alert can be interpreted not as a warning but as a signal. Whales do not commit this level of capital without longer-term expectations. Their behavior suggests they anticipate a volatility expansion and want full control of position size before momentum begins. While retail traders often react to the surface optics of an exchange deposit, experienced analysts look for deeper patterns in wallet flows, trading depth, and structural indicators. The combination of multi-week accumulation, stable macro support, tightening technicals, and comparative historical behavior supports the thesis that this whale movement is not distribution, but preparation. If the trend follows previous accumulation to expansion cycles, XRP may soon exit its compression range and make a decisive move upward. As the market continues monitoring these exchange wallets, the narrative shifts from fear toward calculated anticipation. Traders understand that whale movements can mislead, but they can also signal the earliest stages of a macro pivot. With XRP's technical posture strengthening and on-chain metrics pointing toward continued large holder conviction, analysts project a near-term price target of approximately $3.50. Assuming volume expansion follows and resistance levels break sequentially. Whether the whale intentionally sparked fear to accumulate or simply moved capital for strategic allocation, the overall structure points to a potential upward phase rather than collapse. XRP's next major move may not be defined by the fears surrounding today's alert, but by the strength of the broader trend forming beneath the surface. Please remember, I am not a licensed financial advisor. The content presented in these videos is purely for entertainment purposes. I always encourage viewers to conduct their own research and consult with professionals before making any financial decisions. Thanks so much for tuning in. If you enjoyed the video, please give it a thumbs up and don't forget to hit the subscribe button. Also, make sure you turn on the notifications to be the first to know when I release new content. I'm excited to catch up with you in the upcoming video. Take care.